I'm Terry Saka, and this is Rigged Against You. Today, we're going to discuss the gold and silver ratio. Now, this has only happened a few times in hundreds of years. And what the gold-silver ratio means is how many ounces of silver it takes to buy 1 ounce of gold. And I'm going to show you real raw details of that ratio over hundreds of years and why it's important to understand, because the opportunity for explosive silver prices is now. But then more importantly, behind the scenes, you're going to want to watch this whole podcast, is who's behind everything right now in the financial market. And we're going to go back to 2008. But when you see the secret banking, what we call shadow banking, and what's really going on, you'll understand how volatile the global financial state is. And when you do, I think you'll have a more of a comfort zone on getting properly diversified. So before I continue, please consider subscribing, hit the bell so you'll get emails when the videos drop. I don't do too many, but when I do, this information is very valuable to helping you make wise decisions on how to protect you in this time. Now, I do understand President Trump and what he's trying to do, but remember, President Trump is in a very difficult situation. He was handed a literal hornet's nest, and everybody is so shallow on their thinking. Oh, the economy this. Oh, well, it's not so much that. They just don't get the big picture, but you have to understand the big picture. Trump walked into a time bomb of financial data, and he's trying to break it, I guess you could say, so we can fix it. If he does do what he wants to do, we will have a great golden era in America, but there is a lot of cleaning that needs to be done, and we are going to have some short-term pain. I'm not going to get into the stock market. It absolutely should have corrected. I still believe it probably goes down to 32,000 on the Dow. This was not a typical rebound. The only people who were buying in this rebound on the stock market were retail. It was you, the people. You're making a big mistake if you think you're taking short term. Fine, but be cautious. Big money, smart money, institution money, and even Warren Buffett is on the sideline. Warren Buffett has hundreds of billions of dollars in cash. They know we are literally, any day this thing could go through the big correction, because what we saw was minor. It was only 15% or so, maybe a little more. Right now, the market's down still about 4% on the year, where gold and silver are up. So you have a really big swing for those who have repositioned into gold and silver. You're in better place than you would have been if you stayed in the stock market. And going forward, as I contend, silver is going to outperform the market. So take a look at this gold and silver ratio. This is a really amazing chart. I just love this. Now, this gold silver ratio goes back to 1869. But what I want to do is focus on the red dots. You could see there in the middle, 1939. That's the first time that the gold-silver ratio went to 100. So it took 100 ounces of silver to buy 1 ounce of gold. It peaked at around 98 to 1. But every time it hits 100, you get a big correction in that ratio. And look at the red down on the bottom. It went down to about, I'd say, what was that, around 45 or so to 1. That's a really big deal, because that means gold doesn't move a lot, yet silver explodes. Then we go through the 70s and then come all the way over to 2011. This was after the 2008 market correction. We wobbled on the ratio, but look at the red dot there, 2011. We went down to 35 to 1. And we didn't even hit the 100 to 1 ratio at that point. But then look at after 2011. Shoots all the way up to the pandemic era of 2020, well over 120. It was actually 125 to 1 during that time. And that's when silver dropped down to about $11. But it was after that that the ratio collapsed and silver made a run, and they probably returned about 200% at that point. It got down to about 65 to 1. Now look at where it went since that time. Up. Now you can see here on the right, November of 2024, on average for a while it was staying around 80. And then here we are in May of 2025. Look at the red dot there on the right. We're well over 100 to 1 again. Only 3 times in hundreds of years that this has happened. And so I contend, as you see the red arrow there, that we are coming down. And this is just the beginning on the gold and silver ratio. How far down, we don't know. It can have a few steps. But eventually, you're going to see that gold and silver ratio, and it's all about supply demand. And let me show you this to kind of give you the idea. This is when, in the commodities market, you are to either buy silver or sell silver, buy gold, or switch. So for those that are in gold right now, you've had a really good run. You've made tremendous profits. This is the time to take profit in gold and buy silver. And this is why. Let me make it a little bigger so you can see. This goes all the way back. As you can see, when we're above the 80, now we're not talking 100 now, just 80 to 1 on the ratio. It's the time to switch to silver. And you can see the few points in 2000 and 2008 and in 2015. You can see where you switched to silver because the profit is extraordinary. And then we drop down. Now, if you look down when the ratio is down near 45 or so, that's the time to sell your silver and buy gold because gold is going to run. So this is just how the commodity market trades. Right now on the right side there, you see the blue line. We came down and now we're well over 100 in the upper right corner there, that red dot. This is definitely a major indicator that it is time to switch to silver if you're a heavy gold owner. This is going to be all about return on the investment because that ratio will collapse. And as it does, silver will exponentially go a lot higher than gold. So gold can go up maybe $20 where silver goes up to $3. Now, these charts are very specific. This one goes back to 1985, but it just shows if you were actually trading, and those in the commodity trading side, that's how they go about the trade. When we're at this level, 3 times in history, we've reached 100 to 1. And I know why they're saying it. It's because of the central bank and everything going on. And so silver just won't have that time. They're not looking at the bigger picture. This is definitely the time to sell out of gold, get into silver, mainly for the return on the investment. Because as silver drops down to that 40 range, if we drop silver right now, gold at 3,400, for instance, let's go just right where gold is now, not even rising. Now, gold is on its way to 4,500. So let's go 4,500 on gold, and we drop down to 40 on the ratio. That puts the silver price at $112. And that's nothing. I contend this is going to between 150 and 300 in the future. And there's even big time people in the industry calling for silver 300 to 500. I wouldn't be surprised, but I'm merely talking about timing and urgency right now on the gold silver ratio. As you can see in this chart, it is time to switch to silver for those that own gold. And this is going to be a beautiful run. Now, here's a bigger picture going back to the 1700s. I love this one because if you see the average gold silver ratio was 16 to 1. So 16 ounces of silver for every 1 ounce of gold. That was typically the average. And then you'll see here in the 40s and then in the 60s during those major war periods, we dropped back down to 16 to 1 again. Now here we are on the right side, higher, and you can see the charts are pretty forming. We are well over on the top end of the gold silver ratio. And you can see the dotted line. That is where you will see this ratio go eventually. I say probably within the next couple years. And in my world anyway, colleagues are saying that the silver gold ratio should easily be 10 to 1 on an overshoot. And if gold is at $4,500, not counting gold going higher, which I do believe it does, that puts silver at $400. Why it's so important to get the silver now before this shifts. And it's going to happen because every time the ratio has hit 100, we saw this flip take place. Now, it's important to know, before I go here, let me just say this. The gold silver ratio is a trading indicator, and it is definitely an opportunity, one for those that are owning gold to sell gold at a profit and get into silver while the ratio is this high and the silver price is this low. Granted, silver is in the mid to high 30s on buying power, but that's nothing compared to where it's going. As I said, just the minimally, we should see silver at about $150 an ounce, and that is a fantastic return. Definitely a better return than you're going to see in the stock market. But what's causing all of the markets to be where we're at today? Many of us remember the 2008 collapse when the banking system went down, the whole real estate, collateralized debt obligations, all of this. Back then, let me just do it this way. Back then, it was, this is unbelievable. Let me go back here. Back then, it was institutional traders, investment banks, shadow banking, and extreme leverage is taking place right now. That's the only reason the market is where it's at today. And you need to know this. Now, the retail is all in, but you're holding a bag you're not going to want to hold. In 2008, the collapse was caused by investment banks. Remember, Lehman Brothers and others went out. Now it's called shadow banks and hedge funds that are the ones holding the bag. Now, this isn't good because they're not under the same regulation. The investment banks just back the shadow banks and the hedge funds. They basically offloaded the responsibility, shifting responsibility and regulation. Now there's no oversight to the extreme danger. And what you really need to understand is what I've talked about before, bail-ins. Because the shadow banks and the hedge funds, they're not part of the regulatory environment like the banking system is, but the banks are backing the shadow banks and the hedge funds. And if we just get one glitch in the financial system, they literally are on thin ice. They can't control it all. We get one glitch, there will be banks in deep trouble and bail-ins will happen, meaning your money, your stocks, your investments will be confiscated. It's in Commercial Code 5 and 6. You're actually considered an unsecured creditor in the bank and your stock portfolio. And it's really defined as collateral to the debt of the financial system. Now, while the media is fixated on interest rates and inflation, this is the distraction. There is this is so huge, a 250 trillion shadow banking monster quietly growing. It's hidden from the traditional regulation. Hedge funds and private equity firms operate, and check this number out, 100 to 1 leverage, taking massive risks backed by the very banks holding your savings and your brokerage accounts. Shadow banking now holds nearly half of the world's financial assets. And when those bets go bad, the losses will not be theirs. Bail-ins are already on the table and they're 100% legal. I've talked about this in the past. I even showed the video where the Federal Reserve in a meeting were even talking about preparing how they were going to do this. 100% legal. Archegos Capital was just the warning shot. This happened just a couple years ago in 2021. Do you remember in the financial headlines, Credit Suisse? It was near collapse. We're talking one of the biggest banks in Switzerland, and they had to have a major bailout. This was big, but they were tied to Archegos capital. Next time, it could be trillions and trillions in a trigger debt. Hence, bail-ins will come. Because it's shadow banking, because it's 100-to-1 leverage, we're talking 250 trillion in the shadow banking. This is why central banks are buying so much gold. They know that the implosion of a financial system could absolutely take place at any moment, way, way beyond Trump's control. 250 trillion hitting the cliff. Who's going to get caught? And if that happens, is your account, your savings in the bank, your stocks, will they be caught up in a bail-in? Because remember, you are collateral. There's a reason central banks are buying gold. They're doing it because it's tier 1 asset monetary. We, the people, should be buying silver. And that's why I showed the silver gold ratio, because this is a fantastic opportunity to drastically outperform the stock market and really secure your retirement going forward. So until next time, God bless you all.
With all of the recent changes in the political and financial markets, there has never been a better time than right now to invest in silver and gold. When governments simply print billions of dollars in paper money in hopes of solving financial shortfalls, you know that it is time to buy and hold assets of true and lasting value. Free information is available to you right now by calling 888-747-3309. Whether you are a new investor or you're interested in preserving the value of your retirement accounts, we make it easy for you to make smart decisions for your financial future. The specialists at Cornerstone are here to serve you, work to satisfy your retirement goals, and communicate with respect. Call us right now at 888-747-3309. That's 888-747-3309. Or visit us online at cornerstoneassetmetals.com. That's cornerstoneassetmetals.com.